Hi, good day to all. Welcome to this week's latest edition of our weekly technical outlook for the week of 15th of August to 19th of August 2022, where I'll be sharing with you all the trend bias and the key levels to watch for this week on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 index. So before we start, let's take a look at the disclaimer slides first. All right. So before we go into the technical chart of the various stock indices, where I will highlight the trend bias and key levels, let's take a quick tour on the performance across the globe from the US stock market, Asia as represented by these two big major indices, the Asia region, which is the China-related stock market, the Hang Seng Index and the Hang Seng Tech, and as well as the Nikkei 225, followed by the German 40 index. So what we could see over here is, oops, sorry. Okay, let's go back. So what we could see over here is that last week we have a very robust, or I would say positive performance that is seen across the board in the US stock market, ranging all the way from the SPX 500, the Nasdaq 100, the Dow Jones Industrial Average, and more importantly, the small cap Russell 2000 actually outperformed the pack, which is up 4.9%. But compared to the prior week performance, what we could see is we call it a significant improvement. And if we take into account of the difference between the weekly and the individual weekly performance and its prior 4 week average, so what we could see is that we get the momentum, the difference, and we plot it across time based on a rolling 10 session. In the past, we start to see the momentum trend of the major US stock indices, one, two, three, four, all four of them have started to actually inch higher after last couple of weeks of lackluster movement. Okay, so that's actually a positive for the US stock market. But later I'll highlight to you all, we're actually approaching a major resistance on the SPX 500 and the Nasdaq 100, where we might be a bit cautious going forward in terms of if we want to actually continue to have that bullish bias, we got to actually tighten our key medium-term pivotal support to actually maintain that bias and giving us a quick time to actually flip over to a bearish bias if that support starts to break down. All right. And pretty lackluster movement on the Hang Seng Index and the Hang Seng Tech Index, still pretty much unchanged. Last week, a negative 0.13%. The underperformer is the Hang Seng Tech Index at negative 1.5%. As you all know that one of the reasons could be this impending US big tech earnings that is due to release later part of this month. And starting from this week, we have Tencent out on Wednesday and NetEase out on Thursday. So do keep a lookout on Tencent, where we'll be writing a preview on the report out that is out tomorrow, together with a technical analysis chart of Tencent, definitely as well. So performance wise, it's almost the same for the Nikkei 225, up 1.32% last week compared to the prior. We call it week performance, about the same at 1.35%. If you look at the momentum trend, it's kind of a still sideway, but trying to inch pretty much higher. And as for the DAX, it's actually improving by inching slightly higher as well, not shaping any lower lows on the momentum trend. So the DAX was last week actually up pretty significantly, 1.63% versus its prior week performance at 0.67%. So now, before we jump into the technical chart, let's take a quick tour on the 11 sectors of the S&P 500. What we could see is that all 11 of them are the green. So the top three outperformer are the energy, the financial energy up close to 7%, the financials up 5.5%, and materials also up by a similar magnitude at 5.1%. At the bottom of the table is info technology, which is plus 2.4%. And one of the reasons why is the underperformer of the info technology is actually due to the earlier part of last week, where actually the semiconductor stocks actually sold off at the early part of last week, but managed to actually close almost unchanged towards the end of the week. So the reason of the slow out is actually slow sell off of semiconductor stock is due to a very lackluster guidance from the big US major semiconductors, like Nvidia is one of them. right? So healthcare underperformed last week as well, positive 1.64%, followed by consumer staples, which is ended the week, which is at a minute return or modest return of 1.2%. So without further ado, let's jump into the technical chart. I'll share with you on the let's start with the SPX 500 first. So what we could see the SPX 500 over here is that the rally from 17th of June low is actually coming very close to the 200-day moving average and also to the 61.8% Fibo retracement. So if I draw the Fibo retracement taken from the high of 4th of Jan, project all the way down to the low of 16th of June, 61.8% is here, which is at 43.90 level. So we are coming very close to the a key resistance zone as confluenced by the 200-day moving average, which is at 4310, and also the graphical swing high area of 25th of April to 6th of May. And bearing in mind over here is that this rally itself is still pretty much corrective in nature, given that the fundamentals factor hasn't changed, that we are still facing the risk of we call it a recession. Also, earnings growth have start to indeed slow down as well based on the latest aggregate earnings report of the component stocks of the S&P 500. And bear in mind, the RSI also coming very close to the overbought region at 76% and 80% level. So all in all, right, we'll be pretty much cautious once hit this region itself over here. So yes, for this week we are still bullish, but with a pretty much tight medium-term pivotal support level. So with that in mind, let's go to the strategy chart where I'll share you the key levels to actually maintain that bullish bias. So we actually tightened last week we have a medium-term pivotal support at around this 41 figure level, 4090 level. We will tighten it to 4190. So 4190 as my key medium-term pivotal support, and also confluence with this lower boundary of this short-term ascending channel that I drew from the low of 14th of July, that confluence with the former swing high of 30th of May and 3rd of June, and we will see a potential push up towards 43.10 and 43.90 before the risk of a deeper pullback takes shape from here. All right, this resistance zone here, pretty much cautious, and we're going to see how the sector actually perform in terms of volume as well, and whether would there be a kind of a intermarket relation that actually supports a risk-off environment at this level here at 43.90. So, however, a forward close below 41.90, we will start to see the start of that potential deeper pullback towards 40.80. A break below 40.80 should take us down towards another level lower, which is 39.30. Then now, what's next will be the Nasdaq 100. So if you look at the Nasdaq 100 over here, so what we could see over here is pretty much a strong push up itself over here at this point in time. So over the weekend, I actually tweeted that yeah, even though Nasdaq from the low of 16th of June all the way up to last Friday swing high area, it actually up by 20%. Yep, 22%. But if you look at in the past, look at long-term circular bearish trend from the dot-com bubble, and as well as the most recent one is the 2008 subprime crisis. In between this long-term circular downtrend of Nasdaq 100, there are actually several rallies that actually went up 20% and more. But thereafter, the market actually gives up again, and the Nasdaq 100 actually continue its bearish impulsive phase within those aforementioned two long-term circular bearish trend that I mentioned earlier. First one will be the dot-com bubble, and the second one is in the we call it subprime 2007 crisis. Where actually I tweeted over the weekend in my Twitter feed. So later I'll share with you how to actually follow me in my Twitter, where actually I share with you daily updates on the markets to actually help you to get a better understanding on what are the in and out of the current situation in the market, to have to be able to actually plan your trading decision. Yeah. So right now, let me remove this. So with that in mind, we are now indeed coming also very close to a key, a major resistance on the Nasdaq 100, which is at 13,540/900. Yes, a bit of room more to push up more towards this level over here. So also close to the 200-day moving average. Graphically, it's a graphical resistance zone, as you could see over here as well. And if we could do the Fibo retracement taken from the swing high of 22nd November, the all-time high in November last year, project it down to the low of 16th of June 2022, we will see confluencing at the 50% Fibo retracement level. Okay, so with that in mind, yes, we are continue to be bullish for this week. Similar to the SPX 500, we actually tightened the key medium-term pivotal support to 1294. 1294 to actually play this potential push up towards 13,900 slash 14,100 level. All right, and also 12,940 is actually confluencing with the lower boundary of the short-term ascending channel in place since 14th of July 2022 low. So, however, if we start to see a 4-hour close below 12,940, then all bets are off on the bullish side. That is where we start to see the start of a deeper pullback to actually retest this former swing high area of 22nd of June, now acting as a key support area at 12,180. Okay, which is also confluencing with this previous, we call it ascending channel support level that is drawn from the 17th of June 2022 low. Now, with that in mind, let's take a look at the Hong Kong 50 index. So you could see the Hong Kong 50 index pretty much unchanged last week, still in a sideways range, holding below the 20,340 upside trigger level that we have for last week. So pretty much unchanged. So we will still maintain that bullish bias within these two key levels as long as 19,165 holds, and we need to see a clear breakout, that means a 4-hour close above 20,340 before we could actually more or less further has a further odds to see a further push up towards the upper limit of this big sideways range that is in place since 4th of April high towards 21,100, maximum 21,400. And one thing positive I'd like to share with you all is on the weekly chart itself. So if you go to the weekly chart, it started to shape two bullish weekly dragonfly like doji, bullish dragonfly hammer doji candlestick. So what's the key difference of this significance of this bullish dragonfly weekly candlesticks that we've seen in the prior 2 weeks is actually the price action traded much lower, but it got hammered out at the low and closed near its open. So indicating to us that the initial bearish tone has kind of negated throughout as the week progresses for the last 2 weeks, which is positive in nature. Okay, so but definitely if a 4-hour close below 9,165, then we should start to see a deeper slide to actually invalidate this bullish bias to retest the 15th of March 2022 swing low area at 18,240. Okay, so now moving on, next will be the next major Asia indices that I monitor on a frequent basis will be the Nikkei 225. So what we could see is that the Nikkei 225 or the Japan 225, we call it our platform. Last week, right, it managed to actually shape a push up above 28,400. So last week was neutral due to actually mixed element that's coming very close to the top of this range, which is in place that kept previous upside since 3 months ago, which is 28th of March. Okay, 2022. So last week it has a clear 4-hour close and daily close above 28,400. So right now we can actually validate a push up to actually see a push up towards this the upper limit of this complex range configuration that is in place since February 2021 swing high. Okay, very clearly the 14th of September swing high last year did manage to have a clear breakout above 30,716. So we still trading in this very complex range configuration for close to a year and a half or so. So definitely in the short term, we could actually pay a further push up towards this 29,380 level. And also we look at the daily RSI seems to be pretty much positive after it's shipping that bullish breakup from this former descending resistance that was previously resistant at 58%. Now I think it's a support at around the 56% and hasn't hit the extreme overbought level at the 81% mark. Okay, so now what we have for this week on the key levels to maintain that bullish bias, to flip to a bullish bias is 28,400. As long as there's no 4-hour close below 28,400, we may see a push up towards 29,380, which is this swing high area of 5th of January that I show on the daily chart. And a further push up above it may open up scope to retest this 16th of November 2021 swing high area at 29,930, and also the upper limit of this we call it medium term ascending channel that I draw from the low of 8th of March 2022. But however, if we start to see a 4-hour close below 28,400, then we will actually invalidate this bullish bias to see a deeper pullback to test the next support at 27,420, 27,280, which is the former swing high area of 28th of June. And as well, if we do the Fibo retracement taken from the low of 20th of June all the way project up to the current high. So this give us close to 50% as well. All right. Oops, let me draw a proper one. Okay, 50% retracement. Now, moving on, next will be the German 40 index. So on the daily chart on the German 40 index, last week were neutral. Why? Because it's approaching this 13,900 level, and the RSI is also still hasn't broken above this intermediate corresponding resistance at the 64%. So all in all, right, we will still maintain that we call it neutral stance between 13,900 and 13,360. Unless we have a 4-hour close above 13,900, then I could validate a further push up towards 14,500, which is this swing high area over here. Swing high area of 22nd of April and 3rd of June. But however, you start to see a 4-hour close below 13,360, then we will actually validate a deeper pullback towards to retest the next support area at 13,100 level, which is the former swing high of 8th of July and 19th of July. And as well, if I draw the Fibo retracement, taking from the low of 5th of June all the way up to the current high, it's actually close to the 61.8% retracement as well. Right. So all in all, right, we were actually for this week we were maintaining that bullish bias on the SPX 500 and the Nasdaq 100, but do bear in mind that they're now approaching key major resistance level. So to be a bit cautious, so we actually tightened the key medium-term pivotal support. We will actually maintain that bullish bias on the Hang Seng index, and validate a further push up on the Nikkei 225 and remain neutral for the German 40. And it still hasn't has a clear break above the 13,900 level with mixed elements. So before we go, right, let me share with you my Twitter account. So this will be my Twitter handle. So what we could see over here is you can actually follow me at my Twitter handle, which is one second, please. Okay, at Kelvin SC Wong, over here at Kelvin SC Wong. So what we could see over here is I actually tweet on a daily basis. Okay, so if you could look at my tweet on Sunday, this is where I actually tweeted this potential tweet is over here is that in the last few instances, SPX has 3 rallies of more than 20%, but however, it still continue to actually shape down thereafter. So the point I want to make over here is that even though Nasdaq 100 make a 22% rally from its June low, it's not a definite signs or a definite trigger say that hey, we are now out of the woods and we are start of a brand new major bullish trend. All right, so just bear that in mind. So however, so with that, I wish you all a great week ahead, and I'll see you all again in my next video.